All right, I think we're live. It's Monday, and I understand it's a bank holiday in the UK, and but no such holiday today. However, it's the day after Easter, and I know that many of you people were probably celebrating Easter or observing that holiday and ate lots of chocolate, etc. Here, the way I celebrate, just about every weekend, is to take a nice long walk. And yesterday we took a long walk with the dogs on Ponkapog Trail. And that was very nice. It was a beautiful day. And it's getting more beautiful every day. Today, 0 DTE was beautiful. We took a trade. I actually entered the trade last night around 7 p.m. And right now we're in an interesting time. The average true range or expected move in the market is quite high. For the S&P, it's probably anywhere from 15 to 40 points in a single day. Almost every day. And today I think was bolstered by the expectation that this $1.9 trillion stimulus plan will get rushed through Congress, and then all that capital will get injected into our economy. And, heck, I understand. So last night I put on a long call, and my expectation was that we would potentially move from, let's see, where did we start? At about, I was thinking potentially about 50 points. Started around 40.25 on the E-mini S&P, and move up to 40.75, and then in fact we moved to 40.73.75, and that's where we exited. So we entered at around 40.25, exited around just under 40.75. Now I had set my my strike price actually above that at 40.80, with the idea that if we had this extra boost of irrational exuberance, that we would get up there. But right at the point where we hit where I was fully expecting the move to go to, it seems that the market stalled a bit, and I think we've put in the high for the day. And it doesn't matter because we're all out of the trade and returned over 500% on the risk that we took. Now you might think, 500% on a 0 DTE trade, or how is that possible? Excuse me. Yeah, when you consider that seems like the inverse of what most people do with 0 DTE. Wow, I can't believe I almost forgot this. Can you hear me now better? I pressed the cough button. I got something stuck in my throat. Yeah, so we're doing something very different than what most people do with the 0 DTE trade. Now, I guess the accepted standard, and I don't know why it's accepted, and I don't know why people are doing this. They've seen some so-called pundits on YouTube provide all kinds of back-tested data and trades and everything else. And then there are several other people out there that are showing how they make $1,500 a week on $5,000. And, I just didn't believe it. So I started out my service a couple of months ago following this kind of narrative, and just to see how it would go. And, you make tiny little profits, and then all of a sudden inevitably will hit the risk, which is huge, and it wipes out all the profits. And then it happened again, right in a row. Wiped. So while all these people are talking about putting on these high probability trades with a 5 or a 6 delta, they never really talk about the risk. Now, I knew what the risk was, but I thought, okay, we can manage it with some kind of stop or whatever. And I started doing the analysis on that, and it just didn't work. So I decided we were going to do it the asymmetric way. And of course, that's what, my service is all about right from the very beginning, since I started this over a year ago, that everything that we did should be taking asymmetric returns on risk. And so that's what we did. And that's what I did. I switched this whole zero DTE risk equation where they have huge risk and small potential profit. And there are a lot of problems with that. I mean, small potential profit means that you're going for a small amount of premium, and that means that you're going to have to stay into the trade for a long time to collect any portion of that premium, while that huge risk is looming, and you're sitting there with, moving to either the left or right side of the, and potentially spending most of the day underwater, hoping that you're going to fall, or that your price will stay inside of your profit zone. And if it doesn't, then you can get stopped out, or you can chicken out, or it can move very quickly and you can experience a max loss. And that's just not the way I like to do things. So I decided that we would invert that in what I call the inversion of risk, and take small amounts of risk, take trades that are way out of the money. And you will say, well, how do you make money if you're way out of the money, if your average move is this and you never hit and get inside the profit tent, Ernie? Well, the reality is that you don't have to be inside the profit tent. What you need is a very large potential profit, very high, if you're doing a credit spread, a very high credit or a very high potential profit. And what that will give you is a curve, a profit curve that is very steep. So, however, you're starting at a very small potential loss with a very high potential gain, which is just outside of the expected move. Now, the interesting thing is that in the market that we're in today, this very high expected move seems to be a regular occurrence lately, but that's not going to last. But what will last is our expectation of a move, and we're working on a probability of touch. Now all we have to do is get the direction right. So if we can get the direction right, say 70% of the time, which we do, then you can make a really good profit based on your risk. So we take risks that, instead of them being what everybody else is doing, essentially 10x risk to 1x profit, we take 1x risk to 10x profit potential. Now today it was even more than that, because I expected us to potentially go to 20x or unlimited profit. In fact, I didn't even go for a credit spread or a spread at all. I just went with a long out-of-the-money call. And we hit 500% profit. And it was just at that point that it hit my expected move. I decided to get out, and now the market is turning around. So yeah, that's what we do here. We don't stick to some, pie in the sky idea that you can make consistent profits, small consistent profits with high probability trades, because that makes everybody feel good. But it's not reality. It doesn't work. It just doesn't work. Let's see, what are people saying? Bitcoin was a better return. No, it's not. In fact, the trades that we're doing in the asymmetric advisor are outpacing Bitcoin, right? Simple as that. We're outpacing Bitcoin. Our return today, 500% return on the money that we put up for the trade. Did Bitcoin make 500% today? I doubt it. So don't give me the Bitcoin crap. I mean, Bitcoin has been a wonderful trade. There's no doubt about it. Ethereum has been an even better trade, and I think Ethereum will actually be better in the longer run. But I think that you're going to be seeing a wall in the next few months on Bitcoin. And while you're hitting that wall, we'll still be making 150, 200, 500, or 1,000% on our zero DTE trades and our asymmetric advisor investing portfolio. Let's see. Yes, I brought my mic closer. And, look, Bitcoin might be our future reserve currency, and that would be great. And it's probably good to have some Bitcoin. But trading Bitcoin or, relying on it now. Oh, my God, what was that? I couldn't hit the sneeze button. I have a cough button and the sneeze button, same button, but I couldn't hit it. Sorry about that. So that's the report for today. Now, I don't expect this irrational exuberance to continue. As a matter of fact, today's move, I think, was the last such move that you're going to see, at least for the next couple of weeks. I think we've kind of blown the wad, so to speak, and that we're going to probably pull back a little bit. Now, I could be wrong. I think that we will finish the month above or probably around 4,100, which is just a little bit higher than we are now, but we're not going to do that right now. I think today was, reaching for that sky. We're going to pull back and then grind it out for the rest of the month. And there should be some increased volatility for the rest of the month, so that would be good. It's kind of like one of those, what is it? You buy the rumor, sell the news. Well, we've gotten to that point. People are getting over this weekend, hearing about this huge stimulus. They bought into it right up through the last couple of weeks. And here we are. And I haven't actually looked at the news, to tell you the truth, but I'm going to assume that, that whole narrative now, the $1.9 trillion stimulus, I don't know why they call it a stimulus or a COVID stimulus, because hardly any of it goes to COVID. It's just, basically a bunch of it's porculus is what it is. But it doesn't matter. It's going to find its way, or people think it's going to find its way into the economy. Will it cause inflation? Absolutely. You probably won't feel the effects of that inflation immediately, but it is coming. Will it put us over the tipping point in terms of inflation and cause runaway inflation? Probably. But will that happen, next week, next month, next year? That I couldn't tell you. But I think it is coming. They can't afford it to come. So they're going to manage interest rates, keep them as low as they possibly can, and potentially ration that credit for companies. And you're starting to see this change now too. I mean, they're trying to subdue, or at least the market is recognizing this, trying to subdue this irrational exuberance by pulling back a little bit from the growth companies now that they've very soundly built a bubble there and they're ready to pop. Credit's ready to pop. So it seems that now money is now rotating out into more value. And these are the companies now that are going to be receiving the big credit. And we'll have to figure out a way to manage that, ration that credit, grind our way out. So it's going to be interesting. It's going to be very interesting over the next year. And zero DTE, I think, is the perfect tool to sit here and take advantage of that intermediate volatility that happens with the market. Jump in on Monday, Wednesday, and Friday, and potentially, well, we're making on average about a little over 150% return on the risk that we take every Monday, Wednesday, and Friday, about 70% of the time, and about 10% of the time, and maybe a little bit more than 10% of the time, we actually hit our upper range goal, and that's usually anywhere from 500 to 1,000% return on the risks that we take. So if this sounds like something that you'd like to do, compared to the way other people are doing zero DTE, then join the service. I think you'll like it. Where we don't sweat any trade. Our risk is so small that if we lose, it's like no big deal. But most days, we're actually doubling our return on our risk. And some days, like today, we hit 500%. Not bad. Last Friday, we actually did, we got out early, but we had the potential to hit 1,100%. And I didn't personally get that. I finished up at about 350%. So still, not bad. Not bad for a day's work. And we trade generally the E-mini S&P futures, or options on the E-mini S&P futures, or options on the SPX. We'll do the options on the SPX every once in a while if we feel like there's an opportunity intraday. But most of the time we're trading the futures because we can put them on during the Globex or overnight session, and thereby collecting more profit or potential profit or premium, or just have a better position that we can be in where we can sometimes be out of the market before the cash market even opens. So that's it. That's our report today for zero DTE. Today, again, we didn't do an iron condor. We didn't do a credit spread. We did just a simple long call. And it was good. And it was easy. So I guess that's the other thing, that we're not tied here to a specific strategy. The strategy will fit the market and the event that's happening. And that's what happened today. Well, any more questions here? Yes, we will have. I have prepped Bitcoin Bob for a beating. I'm getting back into shape. I'm getting my timing down, and I promise that I will have a Bitcoin Bob beating for you on Wednesday. So you have to tune in for that for the next zero DTE session. For now, that's it. I want to thank you very much for joining me. And look, if you want to join the service in all seriousness, our service is by far superior, I believe, to all the other services out there. We take very little risk, or we have this inversion of risk idea, and we make excellent returns on a consistent basis, and we never experience that huge risk event ever, because we don't have to. All right, that's it. Take care.